Well, we started back in 2020, spring of 2022, as a matter of fact, and was kind of at a point in my business structure that I wanted to make a bunch of changes. I wanted to do two things, two goals in mind. Number one, I wanted to buy my life back from a time perspective. And the second thing was I wanted consistent cash flow. Obviously, we all want to help our clients better. We all want to do those things. Those are things we should strive for every day, but those aren't necessarily the things that are going to make us change the way we operate our firm. So you have to kind of have that big why. And so my why was I wanted to work less, but I wanted to have consistent cash flow. And so those were the whys why I started. And I knew that I needed to work with less clients and do better service, more things than just compliance related CAS 1.0 type of services that we were providing to many business clients. We for the most part would accept any client at any time because we needed to make money. And I had to make sure payroll was there every single Friday. Like those types of things that I think are common among firms, but it needed to be bigger than that. So we started the journey of, okay, it's time to cut the client base down and expand our services with a smaller number of clients. And so that's kind of how we got started. But I needed to start from scratch and understand even just the vocabulary and the words you say and what they mean and try to like dumb it down for myself first because I knew I had to communicate that stuff to a client. Being able to provide more futuristic data than just the typical, oh, let's just look back what happened in the last year. We should expect a 5% growth. Okay, yeah, okay, we figure this might work out. And just like not even actually, honestly, having any conversation with the clients. It was just, you know what, we're going to do compliance related work and we're going to get your bank account reconciled. We're going to make sure you know what estimated payments you need to make. And it looks like you guys did well last year. And that was kind of like the way we approached the client. And I knew there was more I should be doing. There was more planning, more thinking through scenarios than we never even had a minute to think through scenarios. Like it was more of what does this transaction for and what did you buy over here? And those were the questions we were asking were transactional, not strategy. It was transaction rather than strategy. So I knew I wanted to move into that area because we always wanna undersell and overdeliver, but you can't do that in compliance. The numbers are the numbers, you pay the tax you pay, we can strategize as much as we can, but that doesn't help grow their business. So I needed to be more of an advisor than just that. I thought, getting their tax return done, doing good tax planning, look at me advising them. That's just not the truth. Definitely our client relationships became better and better as we move forward. Now we're 2 years into this process. It takes time to learn what those conversations need to look like, to understand, to ask the questions and not just offer advice. So that's what we've been going through, and I really saw differences when a client would say to me, "Listen, I'm thinking about opening a sports bar adjacent to our restaurant, and so in the same building, but being able to utilize the same kitchen and trying to strategize and budget and forecast what if scenarios. Okay, assuming, you're gonna have 100 customers in one night and we average the sales at $30 per sale, assuming 25% on cost of food and beverage and 10% on labor, what does our profits look like? I've never done that with clients previously. And the benefit that they see was like, wow, okay, you're really helping me make some decisions on pricing, helping us make some decisions on staffing. And so we really realized that there were things that we've been missing for 23 years that we should have been offering. And those conversations meant more to the client than just taxes. As a matter of fact, clients don't ever want to talk about taxes. They want to talk about their business and their growth and expectations of hiring employees and putting another truck on the road. And what does that look like from a profit center? That's the stuff we're doing now that we are never doing before. And the client sees value in that. They can go to H&R Block or wherever the heck they want to do to have taxes done. But where are they going to go to get somebody to actually give them some forecasting, budgeting, and asking the right questions? That's something you find in someone who understands the meaning of that data. It's a situation now where historically, again, just trying to get the books reconciled to get the tax return done. We really didn't know. I mean, you do safe harbor tax planning. Everybody can do that. It comes right out of your tax software based on the previous year. Like those things, we know we can do those, but to be able to say, okay, in July, let's take a look at your first half of the year. What are we thinking from a trend from the previous 6 months or 9 months or even seasonality? Last summer, what were your financials last summer? What did July through September look like? Okay, it looked like this. Are we on track for that same revenue? Or are we looking that we think we're growing? We've got maybe more people on the road. So we're strategizing with them. And at the same time, this is what is like mind blowing to me is the tax return is just done. When it's time to do the tax return, we already know the assets that they've purchased. We already know all the things that they've been planning. We've looked at a tax plan. We've discussed future estimated tax payments, whether it's past serenity tax, which is a great strategy. But at the same time, we're talking about the business strategy together. And then the tax returns used to be a nightmare. And the books, we could never get the books on time. We got all these extensions, and now we're wasting our time on extensions instead of having conversations. And now we're not doing extensions. We're done on April 15th. And now we're able to move through the whole rest of the year, 8.5 months of being able to just talk to the client and figure out what do we do in the rest of this year. And it's been transformational because they're hearing from us often as opposed to only during tax season. And at first, you may not really understand it. I can say I didn't totally understand everything about every process, and I didn't know everything about the technology, but I knew I had to make a change in the way I was handling my firm. And that's the way I presented it to the clients. I said, listen, I'm changing my business model. And my business model is to become a more proactive advisor and doing more for you than just your tax return. So it was kind of an easy sell because that's all we were doing were taxes and books and payroll and all the boring stuff. And when I said, listen, I want to be more future thinking in that process, and then we actually started doing that work, it just became so much easier for us to have that time with them. But it is a journey. It takes time. You're not going to see a reward tomorrow. It's going to take time because your process has to change. You have to figure out in that journey who's going to be in charge of handling doing the actual planning, looking at the financials, doing the forecasting and the budgeting and making it make sense to present to the client. That takes people to do that. You may be a firm where you have just bookkeepers, right? So if you're a bookkeeping firm, you can absolutely still do this work. But it's saying, well, I don't want to hand this over to Jack. Jack's already overloaded and overworked. So it's a combination of, well, if Jack wants to be a partner, this may be a track that he can focus on in order for him to become partner as part of his partner track. But at the same time, you want to be careful not to totally overload people either. And so there's just it's a process. It doesn't happen overnight. You may not even have any of the right people to do this type of work. You got to find someone that can come in and understand how this works. A lot of times those are people who are in finance, economics, things like that, that maybe are not a bookkeeper. Maybe the bookkeepers or the CPAs even. I really struggled with learning the process. It wasn't anything I ever really knew. So I knew I wasn't going to learn it overnight. And I think that that's part of it and the technology, all those things are going to take time. We're in our second year. We have our cash flow is a phenomenal. My time and the time that I spend in my firm is phenomenal. So we've got the time, we've got the cash, and now we're just really just saying, okay, listen, if you want to work with we're at the point where you want to work with Powerful Accounting, this is how we work with you as a small business. If it doesn't work for you, it's our minimum fee. If it doesn't work for you, then we're not your people. You might want to just go to a compliance firm. But we've changed that attitude, and it's taken us time to really embrace it and to understand it. But I can tell you the investment is worth more. The 23 years I invested, this 2 years was worth way more than the 23 years before that. some people get so bogged down in FP&A, advisory work, all the things that people talk about in the industry on a daily basis. People think they have to define every single little thing they're going to do for the client. And it's really pretty straightforward and simple. Make a list of the least amount of work you'll do for that lowest level of service. You're probably looking at historical stuff. You're still doing a little bit of budgeting. You might be getting a little bit into that. That's the lowest level. Then you move up a little bit and you're like, okay, well, we're doing a little bit of forecasting. Or then we move to the highest level, which is we're controller, man. We're going to help you do budgeting. We're going to help you do this forecasting at a whole different level. We're going to do case scenarios of if we do this, this is going to be the result. Maybe we propose to them 3 different scenarios so that they can make a decision. We're going to put more work into it at the higher levels. But for my clients, it was easy because all I really was doing was CAS 1, which is bookkeeping, doing tax returns, payroll, sales tax. That's not being an advisor to a client. That's just doing base minimal work. And when I said, listen, we're going to do entity planning, we're going to take a look at buy-sell agreements. Not that I'm going to do them, but we're going to find an attorney that's going to do buy-sell agreements for my partnerships. Things like that I rely on historically, I relied on the business owners to handle. And I knew that they just needed guidance. And it's a lot about that. So it was really easy for me to go in and say, hey, we haven't been doing these things. These are things that we should be thinking about. Do you want to be billed by the hour or do you want to get on a subscription? I call it relationship pricing. Or do you want to get, bills every once in a while? I'm like, my business model is not going to operate like that anymore. You want to stay with me. This is how we're going to do it. You're in or you're out. And when you get your first 3 or 4, you get confident. And it's just practice, practice, practice. I think for me, the hardest part was understanding what FP&A was and what was the process for that. Because again, they didn't teach that in college. It wasn't a service anyone's ever showed me before. So understanding how to implement that, how to have the conversations with the clients, understanding you don't have to go to the meeting with all the answers. Like that was hard for me because I'm used to saying, well, if I'm going to give them value, I better show up with answers. I don't even know what their questions were, but that's the approach I would take. So, changing the way you work and interact with clients was extremely different than what I'd been doing for 23 years. I think that was the hardest part for me. The pricing wasn't as bad. I knew what my budget needed to be because I reverse engineered how I did it. So I didn't start with, oh, let's figure out what pricing should be. I said, wait a minute, how much money do I want to make? How much money does my girl Nicole want to make? How much money does Tracy want to make? How much does it cost to run my firm between overhead, insurance, software, all those things? So I knew that I needed to make this in order for us to be where we wanted to be. Not even, comfortable and maybe even a little bit more comfortable. That helped us find a number. And then we said, okay, we know we need $360,000 for all the things we want, our a dream. And we knew that was $30,000 a month. Not rocket science, I can do the math. And then we sat down and we analyzed our client base. That part was easy. And figuring out who we want to work with and how much did they pay us previously for just being CAS 1.0. And we took it from there. That part was easy for me. But I was also willing to say to myself, if none of these business clients are willing to do this, I have to accept that. And then I have to shift and decide what I want to do from there. And I was all in. I was all in. One of my clients who want to buy or is going to be buying a building. So they're leasing to own right now. We're just trying to make a simple decision on should they buy it outright? What's the cost of buying it outright versus financing? So what is the best route? What's it going to cost you if you finance this commercial property versus if you pay it in cash? So that type of thing was really beneficial. We know, so we were able to forecast their cash flow, calculated distributions to them as shareholders, taking that money, investing it in a money market to at least make some money while they were waiting to actually purchase. It was a 5-year agreement. How much interest could they earn on a money market at 5%? Hey, that's great. That's an extra 25, whatever the number was, 25,000. But look at what you would be paying if you couldn't put the cash together, which is what we weren't sure they could do. forecasting out the fact that, yes, you could, in fact, in 5 years, have the cash to pay for this building. That was a really fun project for us to figure out with them. Another one is where they were trying to figure out whether they should put another truck on the road. They're an HVAC company. Should they put another truck on the road? What's the cost associated with putting another truck on the road? What's the workforce look like? What would the revenue they would need to generate in order to support a truck like that? So that was another fun project. And then the one I mentioned a little bit earlier was around the restaurant wanting to add on a potential bar scenario and what were the costs associated with that? What should the pricing be for, the drinks and how should they turn over the tables? Like table turnover is another really big thing. How many plates they need to serve, those kind of things. We're able to forecast what they needed to do so they could, work around their strategy, make sure they were having enough people on the floor, enough bartenders, back staff, things like that. So those projects are fun. Those are numbers they don't have yet. Numbers that we can help them create to look at scenarios to say, well, if 100 folks come every night, if 200 folks come every night, and the average plate is $25, like those are the things that we can actually use and calculate in a strategic way that I was never doing that before. It's super fun to be able to actually give them information. Like they'll ask me questions. Hey, what do you think about this? Oh, sounds awesome. Okay, good for you. When in fact, it's like, let me show you what the return on investment of those distributions, or yes, it does look like you'll be able to pay cash, or no, you guys are going to have to increase your sales by 10% over the next 2 years in order for us to see that, yes, the cash would be there for you to buy this particular building. And because if you buy the building commercially, it's going to cost you $110,000 in interest. And then, we meet periodically to take a look at what the cash flow is. Can we make a distribution? We just made one yesterday. Can we make a distribution, get that all taken care of? Then we can actually look into their investment strategy, which I don't do, but we've got a meeting with their investment guy, their investment manager, who's going to jump on a call with us because they've got X number of dollars in cash in there. They've already have enough saved for the building. Now what's next? And so we're forward thinking as opposed to reacting and looking at the past. And it's been, the value is so there and they see it, and we're delivering what we're promised we're delivering. Thinking about restaurants are a good industry, a really important industry for FP&A. Since COVID, they have struggled. They're still not out of it. The nationwide right now, the sales are down 15% on average for restaurants. Thankfully, my particular restaurant that I have, and it has nothing to do with me, but they're down only 13.4%. But looking at that and saying, when are you going to run out of money? What is your debt service? That's another big thing for those who have the EIDL loan and those that took out other loans in order to just survive through COVID and now trying to rebuild their business. And maybe they've taken shifts since COVID. What does that look like for them as they move forward? And this is a time we've never understood before. So we've got to have the tools in place to be able to help them as they're making decisions on which direction are they going to go. Workforce planning is a huge deal in restaurants. And so we've got to have those tools in place in order for us to be able to deliver that information. The problem with the misconception of what a real FP&A tool does is that with the standard reporting, you can get your balance sheet P&L look real pretty, get some nice KPIs, all historical. So a reporting tool primarily focuses on history, KPIs, report packages that are nice and pretty that you can give to your client. An FP&A tool like Jirav actually helps you look at the future and forecast and if then scenarios on decision making, which is very different than looking at history. And so, and again, it's something that the accounting industry is not used to, I would say, in a majority scope. There's obviously, if you go to your accountant, you're not expecting a financial analyst to be on staff to take a look at that stuff. So that's not a service that we've historically provided or even understood. And I think that's the barrier. The problem is that people the misconception is that a reporting tool is the same as FP&A and advisory services on futuristic goals, futuristic potential possibilities on if thens. And that's the difference that people really struggle with because it's not something, like I said before, that we were ever taught. And so we have to shift and adjust to the new way of the value of a CPA that, because at some point there won't be bookkeeping. We have to know that that's going to come. That's going to be automated. Will there be some manual interaction? Possibly, and more analytical, but the hand keying is already almost gone. The tax preparation, we know that's going to change dramatically, especially for individuals. So we've got to focus on those businesses and know where we as people can interact and intercede where technology has the gap. We've got to start that now. We can't wait till it hits us. And so now's the time to start being that trusted advisor with regards to FP&A, being more and better at analyzing things as opposed to compliance driven calculations and that type of work. And the human part of it too is the packaging, but along with the ability to have a conversation. So people say, "Well, AI is gonna do that." Well, AI can go I could type a simple 4-sentence paragraph and get a book out of it if I wanted to, but does it make any sense? And how are you gonna be able to understand what I wrote about, and does it make sense? As a business owner, people are first of all, let's be honest, most business owners don't look at a balance sheet or a P&L. And I say the most of them. So for you to even start, let's just even start with the basics of that is to have those conversations with your clients and not rely on AI to interpret those numbers for them. There needs to be a human making human interactions and making sense with that. And I think that again, it's just a gap we struggle with. And we've got to get better at it. I remember when I first got started, I literally there was a webinar that you would watch so it could teach you the actual language around FP&A services because it is a little bit of a different language, right? So that's like kind of what I did at first. And they had some good resources to understand what exactly are you talking about? I don't understand, what do you mean future forecasting? And what do you mean about, the if then scenarios and how you kind of calculate it and the way you think through it. And that's been really nice because Mike and his team are there when you have questions. I mean, I can't tell you how many hours that I spent on the phone with Mike or on one of the team members and just being like, I don't understand. How do I get this to calculate? And what about this piece, this scenario I want to develop? And how does that look? And they're like, okay, well, here, we're going to go through it. Let's take it one step at a time. We're going to look at the different functions. Where's the forecast coming from? Do we want to look at a 6-month rolling average, which I understand what a 6-month rolling average is, but how to actually go into the tool and make that happen in what I'll call the technology language is something that I've never really experienced before. So I say that transition was hard for me, not necessarily because the tool was difficult, but because I just had zero experience. And so the team, held my hand, helped me through it. There were other practitioners that would get involved. I'd call up and say, "Hey, Corey, I'm not sure. How are you using this?" And he would be like, "Oh," and he would go through some I don't know, maybe dumbed it down for me better and just help me kind of understand the language and how the tool worked. And then once I got that down, it was how do I talk to the client about it? And then that again, they help you through the whole process so that you truly understand the tool and you understand how to use it with the client. I did the Excel route for years. And I remember specifically with that restaurant, and we would do budgeting. And I would pull it. This is like embarrassing to tell this story, but this is really how it rolled, right? I would I I would take the P&L out of the QuickBooks file. Now, first of all, cash flow doesn't statement of cash flow in QuickBooks, it's terrible, it's garbage. That may be good or bad. But anyway, I would take the P&L out of QuickBooks and I'd dump it into Excel. Or I would have an Excel spreadsheet that I had going with, formulas and all kinds of stuff. And I'd be like, all right, let me make the next sheet. And then I got to make the formulas right for that sheet. And then I would go in and I'd put the actuals into QuickBooks. And I'm like, oh my goodness, there's a new account. I would have to add a line item for the new account that was created. Every time Nicole created a new account, I want to punch her. So I'm like, oh my goodness, now my Excel spreadsheet, I've got to add to that. And there was so much manual work to do a simple budget for the next month that it was insane. And so I did that for ye and I did that, and that's just a really good example, but a lot of spreadsheet work, a lot of having to recreate formulas. Formulas break, couldn't figure out where it broke because they were like formulas that were on top of formulas and things like that. And it just was such a nightmare for me. And I was like, there has to be a better way. If I'm going to do this budgeting and forecasting and moving to the next level of advisory, being an advisor to my clients, I can't keep doing it this way because I'll spend half of my day managing Excel spreadsheets. And that's what would happen. And it was kind of like, I don't know about you, but when you see a thing like sales tax is a great example. I can't stand doing sales tax. I just it's a compliance thing, there's no value there, I hate it. So, I said, "Okay, those things, maybe it's a tax return where there's something complicated on it, and I know I'm not good at it." I did it, maybe done one every couple years, and I'm like, you know what I do? I avoid it. I avoid doing the things that I'm not good at or that are difficult. And handling Excel spreadsheets were difficult. And I said, if I was going to do this and I was going to shift to having between 15, 25, or 30 clients, we're a smaller firm. I don't want to be doing Excel spreadsheets for 15 to 20 to 30 firms or business owners specifically. I wanted to make sure if I was going to work with that number of clients that I was not going to be recalculating, managing Excel spreadsheets ever again. And that's where I sought out a tool like Jirav that would have those rolling forward from the previous month, looking at the previous year, the next month, maybe doing some increase in sales, decrease in costs, whatever it may be, right somewhere where the formulas are already done for you. You're just putting in the different scenarios. So it was a nightmare. And I knew I couldn't keep my time down because that was one of my goals was to minimize my time in the office. I knew that I was not going to be able to take it to the next level if I was going to continue doing it that way. We're technology overloaded. It's fire hose, at every conference you go to, it's a fire hose of technology. This is not about the technology, though we need the technology, but it's not about that. It's about what you're being able to offer as a service you've never offered before. And if you have offered it, it's been painful. And so, and I would say, I would be honest, I would think to say that most people who tried to offer it gave up on it because they didn't have a tool that would help them execute what they needed to execute in a simplified manner, like myself. It's like, I don't feel like doing this budget thing anymore. This is insane. So again, it's leading with the message, and the message is important. The message is that the compliance matters that we've been doing, and we know the industry is changing, and we need to do better. We need to do better with the clients and helping them understand what their future looks like, not just their past. What are their goals associated with their business? What is their exit strategy? What are they looking to do there? Are they looking to add more trucks if it's an electrical company? They may not be, but maybe they say, listen, you know what, we want to increase our prices. Dawn, if we increase our price by X number of dollars or a certain percentage, what does that look like for us a year, 2 years from now? We want to retire in 5. Oh, you want to retire in 5? Okay, well, let's first of all, we need to determine how much money do you need to retire, do those types of things. But what we've been doing historically has only been future tax planning. And I mean, future tax planning is only year by year. Like you're not strategizing for every year for the next 10 years. You're just strategizing for now. Where in the FP&A world, you're strategizing for a business for the future and not looking at the past. And so leading with the service that you can offer is critical. Then we know you slip Jirav right in behind it to give you the tool that you need, but to understand what you're going to be offering is most important, and how to offer it, how to price it, how are you going to staff it, all of those things, because it is going to be a new part, a new direction, a new division of your business. And so it's important to understand that. And it is where we belong. Number one, it's don't keep doing the same thing you're doing over and over again. That's the definition of insanity. So you've got to understand that when you're ready to move to something like this, it's going to take an investment of time. And what is that time going to take? The time's going to be understanding what FP&A really is, understanding how it will impact the conversations and the advisory work that you're doing with the clients that is different than the way you're communicating with them now. I'm not saying people aren't communicating, it's just different. So you've got to understand that the process entails that time of education. It's going to take time to understand, how are you going to price this? What does that look like? How are you going to have, what is the first conversation going to look like when you're ready to sell this to your clients once you do understand it? Who is going to actually handle it? And that is one of the key factors in planning this out. And that's why it's not an overnight success. No success is an overnight success. Even Michael Jordan, even Tiger Woods, they weren't overnight successes. Maybe they had a great game, great, won a national championship, whatever. It was the hours of investment prior to that that helped them get to that magic moment of success. It's a magic moment of success, but it's all the things that you have to invest leading up to it. And I find that, again, that's something that we're not used to. We're used to doing the things we're used to doing, but with the shift in the industry, we've got to move this in a different direction. So that's going to be a big part of, as you're going through, and that's part of the time. I think that's what people don't understand. What do you mean by time? You're going to need to understand the language. You're going to need to understand the ins and outs of exactly the new service that you're providing. And somebody's going to have to do it. So you got to figure out who that's going to be. And that's part of all the planning that you're going to do as you move forward. I'm just telling my story on my learning curve, is that I didn't roll it out to everyone. I didn't go the first year, I didn't say, you're either in or you're out. I encouraged people to move to this model. I said, and we went specifically at certain clients. We called them up specifically, just them, jumped on a Zoom, went to their office, depending on where they were, and we handpicked those people. I didn't expect, because, and I think some of it depends on staffing. I couldn't take the 50 or 60 clients that I had and said, okay, everyone's going to be on this, because that would have probably killed me. It is a process. So I don't think going all for nothing with people and expecting to put everybody on January 1st or June 1st or whatever is realistic. It's a process, and it's great because you bring on the first 5, 6 clients, right? Bring on those clients and learn from them. Those are your friendlies. Those are the ones you're going to, like, you know what? I'm not really sure exactly how to make that scenario, but let me get back to you on that. You can do that because you're still learning the tool. You're still learning how to do the things. You can come back and talk to them later. But if you come in with all 50, 60 clients and you're like, I'm going to deliver all these services, and you're like, oh no, that backfired. So I think it's a process. The scalability happens when you start to learn and do. So the doing matters. So you're starting with the first 3, 4, 5. You're getting your hands in there. You're getting your feet wet. Some will be faster than me because they're smarter than me. Maybe they have more experience in finance than I do. Some might be slower than me. You need to go at your own pace. But what I would always encourage people to do is don't wait until you feel like it's perfect. There's no such thing. It's gotta be a process. You gotta go through the process. You have to revisit. You have to think about it. You have to give yourself time. You have to be patient with yourself, with your team, with your clients as you go through this. Because it's, again, it's a whole new thing that we're learning and understanding to do. But once you get there, there's firms out there thriving doing this work. And I feel like we're probably 75, 80% there, but we were at 0 2 years ago. I think it's important is that you got to figure out, what do you want your life to look like? Now, some people in the some firms have been around for a while. Some firm owners, they've been, the traditional firm back in the day. This is a whole new thing for them to learn. There's those folks. There's those folks who are new to the industry and hungry and ready to roll. But I want to make sure people understand that you've got to define a why first, and that why is so important. What do you want your life to look like? And then build your firm around it. We've done it the opposite forever. We've built the firm first and the life comes second. And if we can embrace the fact that we can build a firm that is successful, but will allow us to have opportunity to live your life outside of your firm, and that's not normal. Everyone thinks you work the 80-hour badge of honor during tax season. Those badges have to go away. This FP&A conversation and this service that you can provide to your clients will change that. And I only say that because it's totally changed the way I live my life. I have my firm. I love what I do for my clients. I look forward to talking to people on the phone instead of I used to be like, "Oh no, someone's calling again. What do they want now?" And instead it's like, "Oh cool, Mike's calling. Hey Mike, what's up? How are you?" And he, "Are you Dawn, how you doing? Are you busy?" I'm like, "No, I'm waiting for you to call." And I'm able to jump on a golf course at 3 o'clock. I go boating during the summer. I travel to see my daughter when I want. And I'm not I've the least stressed that I've ever been in my life, and I owe it to this process. And so everyone should consider it.